What is an index annuity? If you're considering purchasing an index annuity, then you're probably looking for guaranteed income or guarantee on your capital, preservation of capital. But before you purchase an index annuity, you want to understand exactly what this product is and how it can improve your retirement situation. Hi, I'm Nathan Garcia. I'm a certified financial planner and retirement planning specialist. And in this video, I'm going to share with you what an index annuity is and how it may be able to improve your retirement income. But because I do this for a living for my clients, I have to tell you that this isn't financial advice for you. In fact, I couldn't give you financial advice without understanding exactly what your situation is. So please make sure that you consult with a specialist who's aware of your situation before you take action on any of the advice that you see here. So with that out of the way, what is an index annuity? Well, we start off by just looking at the term itself, index and annuity. The index is what the underlying investment value or income value is going to be driven off of. And we'll talk a little bit more about that in a minute. The annuity is the guarantee that you're purchasing. So most people buy an annuity because they want consistent income in retirement. But an index annuity isn't an investment product. In fact, it's an insurance product. And I bring this up front because folks who can sell an index annuity don't have the same licenses as those who are selling investment products. Now, that's not to say that people who sell index annuities don't have these investment licenses, but there are many advisors out there who only have an insurance license that lets them sell the index annuity product. And so if you're going to be buying an index annuity, you want to make sure that someone has built a financial plan that looks at your overall income situation, your overall financial situation, and they can show you how this product fits into your overall investment plan and income plan in retirement. The reason this is so important is because the index annuity will have two components, two phases to it. The first one is the accumulation phase. And during the accumulation phase, you are building up value for the annuity. So the index is what determines that value. Now, index is typically something like the S&P 500, but for an index annuity, that is usually a blend of different indexes. It could be the S&P 500, the NASDAQ, a bond fund, an international fund. All of them are rolled into one, and you're purchasing a unit or a share of that index itself. Now, this is important to understand because a lot of people look at the performance of the index and think that their investment in an index annuity may be doing the same thing, but that's just not the case because the index value is going to be driven off of things like your participation rate. Your participation rate determines how much of that index you're going to actually have and receive credit from, and the structure of the returns there. So for instance, if you have a 100% participation rate, then that means 100% of your money is going to be invested in that index. But you may have 120 or 140% participation rate. That is going to be based on the specific contract and the state that you live in. So you want to work with somebody who understands these products and understands how they fit into your overall retirement plan. Now, the index annuity can be very powerful because it provides that guaranteed, dependable, consistent income. But what you need to look for before you purchase one is who is the company that's guaranteeing that contract. Of recently, Allianz, Security Benefit, Nationwide, these are all companies that have taken a bigger market share over the past 10 years after the financial crisis. And the reason that they've captured a better market share is because they have listened to the public and they have adjusted their products so that they cater to what the clients are looking for. So for instance, recently you may have different riders that have come out for long-term care or for joint and survivor benefits, income benefits, death benefits. There are all different types of riders that you can use to dress these things up. And it's important to know up front because when you purchase these riders, you're going to be paying a fee on an annual basis. And that fee can increase the overall cost of this product. So if you are taking money that was in an index fund that maybe you were paying 15 basis points for, and you move it into an index annuity that now is 2%, well, you really increase the cost for that investment. And you need to make sure that the insurance component, the guarantee that you're purchasing, is going to be worthwhile. So when you purchase these index annuities, make sure that you work with a specialist and make sure that you understand how it fits into your overall financial situation. Once you have accumulated assets or income in the index annuity itself, at a certain phase, you can annuitize the product and start receiving income. Now, that income is typically driven as a percentage value of the underlying investment value. So for instance, maybe you put in $50,000 into an index annuity, it grew to $100,000, and then when you annuitized it, you were able to take 5% per year for the rest of your life. So you're going to receive $5,000 per year for the rest of your life from that $100,000. This can be attractive if you need guaranteed consistent income, or if some of the features in the index annuity offer exposure to different investments that you typically couldn't get on your own. As a result of these companies innovating over the past 10 years, they have brought in some different investment classes like hedge funds and private investments that you wouldn't be able to get access to as an individual investor typically, because the cost to invest in these companies and in these funds is pretty significant. But what the insurance companies have done is they've gone to these funds and they've said, look, we'll give you $2 billion to invest, but we need to have this type of investment class. So there can be attractive reasons for you to purchase an index annuity, but again, you have to make sure that you understand how it fits into your overall investment portfolio and retirement income plan. Too often I see people who purchase index annuities who thought that they were going to get a certain amount of dependable income from it, and as a result, they put more money than they should have in the index annuity. And that can be a big drawback for you when you go to fulfill your required minimum distributions, or if you need the value of those investments just to live your life. So you want to be aware up front of how much money you're putting in and make sure it's not too much, and then also how it's going to improve your retirement success, your retirement income over your lifetime. So I hope that this helps you out. Each state is going to have a insurance contract that's a little bit different because each state is regulated differently. Their insurance rules are different state to state. So make sure that you work with somebody who's a specialist. Make sure that you work with somebody who understands your overall financial situation, and don't rush to purchase an index annuity, because once you do, there's a surrender period that applies, and that can really cause you to lose a lot of that investment capital if it's not done right. So if you have any questions, leave them in the comments below, and I look forward to speaking with you and seeing you in a new video.